How does the digital asset ecosystem sort of factor into or translate into this sort of new ecosystem for apps?
If you think about the 5 main functions that the financial sector play, payments, lending, saving, asset management, or insurance, each of them are fully affected by the new technological advances that we are seeing, either related to artificial intelligence and machine learning, or to blockchain and DLT, or to mobile money. Any of the new advances that we are seeing in the market is transforming the way that we provide finance.
What is being built in the digital asset space is the exchange of value, which is the top tier of the internet that it didn't have. The digital exchange of value. That's changing everything. But what we're doing is creating this parallel financial universe, which is distributed, recorded, trusted, and that is a much safer system to build on. And that is why we're seeing the rise of Bitcoin prices and digital asset prices go through the roof, price discovery. Everyone's moving into the new home. And this is the new home, and it's over here.
In this video, Raoul Pal speaks on how Bitcoin and cryptocurrency will change every single sector, and it's imperative to be at the forefront of the crypto asset wave. Make sure to stick around to the end of the video where we cover some recent Bitcoin data that covers the most recent dip. Also, a growing number of cryptocurrency investors are subscribing to the channel. If you enjoy the video, consider subscribing. It's free and you can always change your mind. Enjoy the video.
So how does the digital asset ecosystem sort of factor into or translate into this sort of new ecosystem for apps and markets and all of the other things that I think we see the potential for?
So there's two things going on at the same time. One is there's a parallel financial system being built. And if we talked about going out with a whimper, not a bang, we all know how screwed up the current financial system is. And we thought it might go with a bang, but they've rescued it every time by creating more externalities and more laws of unintended consequences. I think everybody knows that now. I think the central banks know. I think everybody, it's not a secret. Mm-hmm. But what we're doing is creating this parallel financial universe, which is distributed, recorded, trusted, and that is a much safer system to build on. And what we're seeing is a slow migration. And that is why we're seeing the rise of Bitcoin prices and digital asset prices go through the roof, price discovery. Everyone's moving into the new home. And this is the new home, and it's over here. And you know, when all of those baby boomers moved into their new homes back in 1980 or whenever they were 30 years old, the price of all those homes went up. This is what's going on, right? So there's a slow migration, and we're seeing it from the traditional investment managers, we're seeing it from family offices, we're seeing it from individuals, and we are seeing it from central banks who are now, because of Bitcoin, created digital currencies to realize that there's a new digital world. That's one thing going on. If that's not big enough, within that is embedded decentralized finance, where algorithms provide yields. There's lending, transmission, remittances, payments, custody, settlement. I mean, this is a multi-quadrillion-dollar world that's being developed, you know, in terms of flow. In terms of stock, the bond market, the equity markets, all of these things are $200, $300, $400 trillion markets each. And a lot of this is going on to this. So this is the magnitude. And currently, the digital asset market is 1.7 trillion. So what is it going to be worth? At least 100x from here still, probably 200x, maybe even 500x. So that's the magnitude of the opportunity we all have in front of us. And this is the biggest thing we've ever been given in anything. But that's only part of it. Because the internet was basically the exchange of information digitally. What is being built in the digital asset space is the exchange of value, which is the top tier of the internet that it didn't have. The digital exchange of value. That's changing everything. Because it's not just payment systems and an integration, but it'll change everything, because people could watch this video and have streaming payments. So you only watch for the milliseconds that you watch. We talked about Brave browser and the other mechanism by which we might get paid for the attention economy. We might have our identity on the blockchain, so therefore I can get paid for my use of my identity. And that's only part of it. Because what is going on in the digital world is people are realizing digital things have value. Because the digital world and the physical world are no different. So in the digital world, I will overpay for a t-shirt because it's come from a fancy designer. it cost me $2. No, it cost the manufacturer $2, and I probably paid $70. It's a yellow T-shirt, but because I want to be the human, I want to have social signaling. We're stupid, idiot, tribal creatures. Online, it's identical. Kids will buy skins or swords or trophies or whatever it may be to socially signal online. They have the exact same value. It is no different. People who don't understand that don't really understand what drives humans. But within that world of exchanging value, there's even yield curves on those skins now, because you want to borrow my skin because it's cool, because it'll help you play a different level in the game that you want to play. So there's 10-year-old kids trading yield curves. The whole gaming world is coming together. The art world and non-fungible tokens. Communities. Currently, if you're a recording artist or a famous person or a sports star, you get paid by using the monopolistic platforms of Google and Facebook, and you will then capture advertising revenue by doing deals with brands. Right? That's a clunky system of many middlemen. We're moving to a world where communities participate in the economics. So you'll have community tokens. So if you're Lady Gaga, you'll have a token, and that token is exchangeable within the community for goods and services and discounts, and it may or may not have a security-like value. But it means that the artist can directly, therefore, monetize with her audience without anybody in the middle. You don't need iTunes, you don't need your PR agency, you don't need your artist agency, you don't need Google, you don't need Facebook, you don't need anybody distributed. So what we have as value changes. So here we are in the Cayman Islands. We hear a lot of tokenization talk, all of us, but nobody really yet knows what it means, right? We've just seen a piece of art sell for 69 million on a token. Again, I have no problem with that. Did somebody overpay for it? Who the hell knows? But I still think art is art in whatever format somebody wants to pay for it in, whether it's a photograph or it's a painting or whether it's music, whatever it is. But tokenization. So here we are in a country, and this is where things are going to change dramatically. So here we are in a country where on 7 Mile Beach, property is unaffordable for most. So if you're an average Caymanian, you don't participate. So it's the rich families and the wealthy foreigners who get to participate, and everyone else gets left behind. But what happens if you tokenize that real estate? If you tokenized apartments in 7 Mile Beach that were $8 million apartments, well, they could buy a fraction of it in their pension plans. So the pension funds could own parts of the island without having to buy whole properties. Or you could build your own basket. I want some on 7 Mile Beach, I want some in South Sound, I want a bit of that development. So now I'm participating in the same projects as the billionaire. Remember the problem we had before, that we said the average person's wage deflation meant that they couldn't participate much? Well, now you can participate a bit more. So you're democratizing access to all assets, which is a huge game changer. If you are a millennial, the 30-year-old now versus the 30-year-old baby boomer back in 1980, the baby boomer got 7% P ratio on the equity market, 18% interest on fixed income, and the cheapest property in inflation-adjusted terms since the war, right? So that meant you had to be an idiot not to accumulate wealth. They were idiots because they accumulated debt as well, because they were too impatient. But they had to be an idiot to accumulate. So then the same 30-year-old now for this millennial generation, huge bunch of these guys, they've come out in debt from university. So they're on the back foot, as opposed to their parents who actually ended up in debt. These guys started in debt. They started with the equity market at all-time record high valuations, the bond market at all-time record high valuations, the credit markets at all-time high valuations, the property market at all-time high valuations, right? That is going to be a lost generation. Suddenly, the digital asset world walks onto the scene. Now, I'm talking about a 500x growth, potentially, over the next 20, 30, 40 years, their investment lifetimes, where they can participate in things that were expensive. We could have all potentially, if that piece of art was tokenized for many, not just tokenized for one, which was the NFT, we could have all participated in it. Christ, we could have all made money from all of those Monets and Picassos that sold. We couldn't, because none of us could afford it. We couldn't make money like the billionaires in New York who could own all the property, but now we can. Right? This is game changing. It levels the playing field. It's democratization en masse. So we've got everything from the digitization of everything, the internet of value, a change of the internal financial system, and a change of the very construct of how we can save and invest.
And so how does somebody participate? Like, what are the first steps that you would recommend for somebody who is...
Problem is this is an incredibly complex world that is moving at a faster pace than anything I've ever seen in my entire career.
Mm-hmm.
I've never seen anything like this. It's faster than the internet. The brain drain of people, the talent, and what is going on is of an order of magnitude I've never seen. Why? Because money is there. When I first got a job, I was looking for a job. I was at university. I graduated in 1990 in the middle of a recession. And a friend of my dad said to me, "What do you want to do for a living?" I said, "Well, I'm kind of thinking about going into marketing like that. Or I'm thinking of going into finance because it looks cool." And I said, "What do you think?" Not that I had a choice. It was a recession. I had 120 rejection letters in my drawer. But theoretically, I said, "What do you think?" He said, he gave me the best piece of advice ever. And this applies to this situation. He said, "You can go and work for Mars in marketing. It's an amazing place for fast moving consumer goods marketing. And you know what? You'll get free Mars bars. Or you can go for a bank, work for a bank, and you'll get free money." This is why this is attracting so much attention, is because it's the system of money itself that's up for grabs. So the amount of billionaires that are going to come out of this space is beyond comprehension. Firstly, the first bet is this ecosystem going to go anywhere? Okay, the foundation stone of the ecosystem is the store of value of which it's built, which is Bitcoin.